Hey everybody, this is Brian Terry with the Conservative Covered Call Trading Group, and I just wanted to share with you a trade that we closed out last week. It was in Coca-Cola, KO, and it was an in-the-money covered call with a dividend capture component to it. So here's a copy of the actual trade alert, and we entered the trade, I believe it was on March 3rd. And we bought the stock at $62.74 per share. And then I turned, and at the same time, sold a March 18th 60 call and collected $2.99. The stock went ex-dividend on the 14th of March and paid a 44-cent dividend, which is an annualized return of 2.67%. So including the dividend, it was a 1.16% rate of return in 16 days, and the trade gave us 5.5% of downside protection. And what I mean by that is that stock could have dropped from the 62.74 level down 5.5%, and we still would have made a profit on the trade. Here's the calculation of the trade. So I know it's a little bit blurry, but we bought the shares and sold the 60 strikes, used the March 18th expiration. Here's the 299, and that would have been a 0.4% return on our risk. However, when you add in the dividend, it drops it up to a 1.16, 5.5% downside protection, 27% annualized rate of return, and the break even was, including the dividend, was 59.31. So the outcome, the stock went ex-dividend on the 14th. We qualified for the dividend on the 18th. On Friday, the stock finished at $60.11, so it was over our 60 strike. The stock was called away on Saturday, so we did net the 1.16% rate of return in 16 days, and it was a 27% annualized rate of return. Also, just wanted to tell you what my criteria is for looking for these in-the-money covered calls. First, we do a fundamental screen. We want to make sure that it's a stock that is strong fundamentally, that it has a low beta. We use 1.3 or less for our beta. And we're looking for a minimum of an annualized return of 24%. In this case, KO was 27, so it met that goal. We want 5% of downside protection. In this case, we got 5.5. We want to make sure that they're liquid options, that we're able to get in the trade with a narrow bid ask, and we also want to make sure that it is the stock is in a bullish pattern. We don't want to do something that's pulling back. So we want a bullish pattern. We want liquid options. We want that 5% of downside protection, and we want an annualized return of 24%. So I hope this has been helpful. If you do have any questions or feedback, I'd love to hear from you. So you could either put a comment in the YouTube page, or you can send me an email to conservativecalls@gmail.com, or check out our website, conservativecoveredcalls.com. We have a private trading community, and so there's a video about that. So if you're interested in taking a look at that, just reach out. And with that, I'm going to stop the recording, and I will see you the next time. Thank you, everybody.